Good evening, dear colleagues. As always Sunday. As always, the project ForexTimes, and I'm Dan. A few minutes to talk to you about the likely movement of trading instruments for the upcoming trading week, and as we will start with the euro versus US dollar here, dear colleagues. Unfortunately, there are two options of development scenario which I will tell you about. Of course, after option number O, I like it much better, namely the first option. The option is that you and I have now gone into corrective wave A, and the corrective wave A is impulsive. 1, 2, 3, 4, 5, after which we are now get a corrective wave, and in the corrective wave. So, dear colleagues, if you and I think that this option is valid, we can work it out. However, this is option number 1, and I don't like it, and I will now explain why. First of all, according to the reports of the Commission on Commodity Futures Trading Commission reports, we're seeing an increase in buyers by 6 and an increase in capitalization 3, which tells us that the trend is upward and buyers have come into the market and they brought money with them. First of all, second of all, we can see exactly where is the strongest support range, which is the xauusd options with their premiums. And that's what's nothing but the strongest support range. Why do we think that price is going to try to break through this wall? We don't need you and me to even try to break through that wall. Secondly, and actually those 2 points are all we need quite enough to work on. Dear colleagues, it is necessary wait for a corrective wave and not to sell from range. Fibonacci grid from the wave, try to sell on the pending order under the base of the wave B, in order to catch the probable wave C on the pending SL stop. Why did I make it so complicated? And what I like better, the probability that the price is still to update the maximum, and only then we will go into deep correction, and I'll be with you to catch this correction will be caught, and I will enter the market to sell. Why do I think we can still go up again for the same reasons, the strongest range of support? We tested it and we got a pin bar with you. We got on the test of this range. A bearish pin bar is nothing more than a very good buy signal. First of all, second of all, you and I have Commodity Futures Trading Commission reports. The Commodity Futures Trading Commission reports an increase in buyers, which means the buyers came into the market and brought money with them. So why don't we buy it with them? Secondly, thirdly, the point is, dear colleagues, if you and I believe that this is the beginning of big correction, then therefore this wave is the last one. In the impulse should be then right, it should be an impulse either as a 5 wave and a diagonal, where you and I here can find the impulse structure. Let's try to find the impulse structure. Let's say 1, 2, 3, 3, 4, 4, 5, okay? But you and I know very well that wave 4 can't overlap the high of the first wave. So that means that we can't have a 5 wave structure. Is out of the question. Okay. And maybe it's a diagonal. I mean, for example, a finite diagonal. Well, let's see. Let's say it's a finite diagonal. Hence wave 1, 2, 3, 3, 4, 4, 5. But you and I, you know the rules of the diagonal, namely, which is 1, 2, 3, 4, 4, 5. Wave O is the largest. It's bigger than wave 3. Wave 3 is bigger than wave 5. Can you please look at how big wave N is? Therefore, if wave 5 is bigger than wave 3, and as far as I can see, it's also bigger than wave 1, then in this situation, we can't say anything about the diagonal either, which leaves us that we have left. And most likely you and I were left with a correction. Here we are. The first corrective wave, then a corrective wave in the form of a plane, and the second one. So this is B and this is C. I'm also drawing just to make it clearer. And with this one, we have a flat and then we have a wave at the end, with a 1, 2, 3, 4, 5 in the form of a 5-wave impulse. That's the most probable. Dear colleagues, this is the right situation. So here we have the end of the impulse and we've gone into correction, and here is 1, 2, 3, 4, 5, big S. That's it, correction. The planes are in the third and I have more. Gentlemen have in fourth. If you and I assume that we are moving in an impulse, then we will have wave 1, 1, 2, 2, 3, 3, corrective wave 2, 2, Corrective wave 3, 3. Let me visualize that. That's the most likely. What are we missing? We know that if we pull the Fibonacci grid on wave 3, then wave number 4, 4 very often comes to the 38.2% Fibonacci level, and we see how the corrective wave clearly came here. Therefore, dear colleagues, I like the option number E that I was talking about better. Namely, in the coming trading week, we will see the growth of the trading instrument with the renewal of maximum values. Maybe in an impulse, maybe in a final diagonal. We will see a decrease in volumes and divergence between the price and oscillators on entering the market for sale. So what to do in the coming trading week? Everything is quite simple. One can try to buy at the opening of the trading week with a stop loss under the minimum of the pin bar bullish pattern. If someone wants to sell, you can simply place sell orders under the minimum of the HP pattern with the aim of catching the probable wave 4. Well, I have told you a lot about the euro, and you will not like anything I will tell you about gold. Because gold is the most likely we're likely to continue to rise, actually, and you can see how much the weekly options contracts professionals are expecting price growth. Quite large option 102 orders for 63, 230 million, 53,000, 106, 286 million. And plus at the top is the strongest resistance range, namely the Hydra call options with their premiums in the market maker's loss level, when the hedge with the market premiums are as close to a large number of option contracts, and in our case, 286 million, this level is most likely to be tested by the price of hence we have a target level 2100 for the coming trading week. The level of 2100, moreover, dear colleagues, even if the price goes down, it will be too early to sell it because first we need to see the impulse, then correction, and only after that we need to make some. If we see the classic zigzags 1, 2, 2, 2, 2, then we'll be the opposite. We'll be making decision about to buy at this moment in this. We don't need to jump on this train. We see a correction in the form of a downward zigzag, then an upward zigzag, and another zigzag down. That is ABC. That's when we'll be making a buying decision. But once again, I will definitely repeat, if we see momentum, which is a 5 wave, we may see a small correction in growth to the target level. 2100, and dear colleagues, the Dow Index Johnson. The thing is that the index is rising just non-stop without stopping. Again, you can tell me, Dan, so what about the target level? The target level, it's still at 31,000. It's still at 31,000. It hasn't gone anywhere. The thing is, you know that I enter the market exclusively by patterns. I don't work almost ever just blindly from levels, even if the price is approaching a level. For example, there is a strong level. I still want to see some kind of pattern. I want to see a divergence. I want to see a decreased volume. I want to see an increase in buyers according to the Commodity Futures Trading Commission, Commodity Futures Trading Commission reports at the end of the day. Eventually, I want to see a bullish HP. And if not a pin bar, then I want to see momentum, then a correction, and then make a decision on to enter the market until I see that. And I advise you to enter the market. It is forbidden to enter the market. Regarding this growth, there is not a single pattern to enter this growth. It would be possible to enter into this growth, even more than a month for a few days, a whole option month and a couple more days. It's growing. The only thing there was a decrease in volume here, but we didn't see any divergence of the oscillator divergence. MCD, we didn't see any divergence on D1. By the way, on H4, there are already divergences on oscillators, and this is a very positive. So there was a divergence here, and the divergence is still going on. Here we go. Growth is great, but in order to enter, we need a bearish pattern, either a bearish pin bar or we need momentum. And then a correction, and then make a decision to enter the market, because if we see a 3-wave structure, then 3 waves up, it's nothing but this correction. And after 3 waves down, or even N waves, 1, 2, 3, 4, 4, 5, it can happen. And the market BC, it's going to turn around anyway. In order to sell, we need a pattern to enter the market to sell. dear colleagues, but in order for you to perfectly understand the level 31.000, we still have 31.000 as our target level. Here it is. This is actually the scenario I foresee for the next month. 334, but level 31.000, we will take it. Thank you very much. Dear colleagues, please come and join us in the community. Trading recommendations, trading signals, unique forecasts from the morning, every morning, according to Chicago Mercantile Exchange, I always write. And I always draw arrows and levels where preferably to consider entering the market. But I always write, dear fellow pattern analysts, please, because when I predict movement from some levels to some targets to some levels, I do not know in the future. I don't know if this or that pattern to enter the market for buying or selling. To sell. That's why I'm asking you very much to consider market entries only according to patterns. Here's a little gift. The dollar against the Swiss franc. Most likely in the next few weeks, we will see quite strong growth to the level 0.92 level of 0.92 in the coming week. Our target level from the current price is 500 points here. Dear colleagues, catching pattern as I just told you. Either a bullish pin bar or an impulse correction, and we make a decision to enter the market 500 pips. Dear colleagues, a small gift. Come to Comedy Forex Times. There we have a lot of such interesting presents. Thank you all. Have a great evening and bye-bye.